Okay. In fact, let's also get a view. Venkatesh Balasubramaniam, MD and Head of Research, JM Financial Institutional Securities, is joining us right now for more on what we've seen today. Venkatesh, hi, great to have you on. First view on why you think the mood is fizzled in this sense. Is this just profit booking, or is there a concern that we've not yet seen?
Firstly, good afternoon, and thank you for having me on your show. Now, see, the reason it might have fizzled out is a lot of people might have already been positioned. I mean, after Prime Minister Modi's speech, we all already knew that some of these provisions would actually play out. So, actually, if you see as a lead up to today, there was already a run up in a lot of auto and consumer stocks. So, a certain part of the positives are already priced in before the whole thing actually played out.
Okay, so in that sense, yes, some of this was priced in, but what we've been hearing is that the entire impact is yet to play out on balance sheets, on consumption, on the overall economic boost. How would you buy into that from an equity perspective today?
Okay. So, as you rightly pointed out, first of all, it has to be implemented from September 22nd.
Yeah.
Actually, the current quarter might not be very good because a lot of people have postponed their purchases expecting a GST cut. So, whatever impact you will see, you will start seeing from the next quarter, which is the third quarter. Now, the right way, according to us, is to position yourself, is to look at consumer stocks. And that is why in our model portfolio, which we put out a couple of days back, we have gone overweight on consumption related sectors. So our biggest overweight is actually automobiles, where we are almost 203 bips overweight vis-a-vis the Nifty. We have also gone overweight on a couple of consumption related internet stocks, basically Nykaa and Eternal. We are also overweight on consumer staples, consumer durables to some extent, and retailing. GST benefits will also flow in will flow into the cement sector. So cement, we are expecting that once the new GST rules are implemented, initially most companies will cut prices, but progressively over the next 6 months, we are expecting them to take the prices back up and take the benefit in the form of higher EBITDA margins. So cement is another way you could play this. We were already positive on real estate and hotels. That view remains. Where we are a little worried is on the negative side. We believe these GST cuts and along with the direct tax cuts which happened in the month of February, it will reduce your fiscal space. Now, if your fiscal space reduces, I believe whether it finally happens or not, sentiment around infrastructure capex and sentiment around defense capex could come off, and that could actually lead to a correction in some of these stocks. And I think some of that is already playing out today. If you see some of the defense names like Bharat Electronics or HAL, I think they have started coming off already.
Venkatesh, good afternoon. Hiral this side. An important point that you make is you're negative on infra and defense capex. Does this mean that's the reason why you're seeing some bit of profit booking today as well? Because the revenue loss from GST reforms would restrict the fiscal space then.
Yeah, precisely. So as I was mentioning, that could make it a little tougher on infra names. We still have to see how the government does the balancing act. Do they cut infra capex? Infra capex is slightly easier to cut because it's a much bigger number. Defense capex per se is a small number, so it is not actually advisable to cut it. Given our recent conflict with our neighbor, so it's not something advisable to cut. But yeah, I mean, overall, I think you could see a derating in infra, defense, ports, power utilities. You will see a derating in these sectors as people sell to create funds to buy consumption related themes. So consumption was a sector. Besides internet, I don't think any of the other consumption sectors were performing over the last 6 to 9 months. So we will see funds moving out of these names, infrastructure related names, to the consumption sector, which could cause some of these stocks to underperform over the near future.
What would be your top pick or your favorite in your consumption basket?
So we like quite a few. Honestly speaking, you can pick whatever you feel like. It's not just a few. You can pick many. In auto, for example, we love Mahindra and Mahindra at this point in time. We love Hero. We love TVS. We love Maruti. This would be our four best names in auto, and I think all of them should do very well over the next 6 to 12 months as the GST benefits flow through. On the consumer staples, we really like Britannia and we like Hindustan Lever. These are two names which we like. We also like Titan a lot because I think Titan has the added benefit of benefiting from higher gold prices. So Titan should actually do very well going forward. We like one consumer. Honestly speaking, GST should be very beneficial for the AC names, because GST rates have been cut from 28% to 18%. But there is there is just too much inventory in the channel because the summer has been a total washout. So we don't expect Blue Star and Voltas to actually perform. We don't expect Havels to perform over the near term. We would advise investors, you would be better off holding something like Polycab or KEI. Some of the wires and cables names where even though they are not benefiting per se from GST, those names should do very well going forward.
Yep. Thank you so much, Venkatesh, for speaking with us. And we were talking about auto, and I like that thought that whatever you pick in auto is going to do well. In fact, Harsh